Welcome back. You're watching Money, Money, Money. Minority shareholders have a big role to play in the companies whose shares they own. What exactly is this role and how can you go about it? That's the question we're asking J.N. Gupta, former Executive Director of Sebi and currently Managing Partner at Stakeholders Empowerment Services, and Feroze Azeez of Anand Rathi Private Wealth Management. Also with us today are two of our viewers. We have Ankita Parekh and Mayank Karya. So, Mr. Gupta, you've told us a little bit about, what kind of rights minority shareholders have. What about shareholders' agreement? What all should people look out for in that, and what kind of rights can they exercise from there?
See, most of the time the shareholder agreements are private agreements and they are not in public domain. At times when it is an issue of takeover or something, then such the shareholding agreements do come into the picture, but not in full detail, only the selective clauses come. In my opinion, one doesn't have to be very much bothered about the shareholders agreement unless it hurts you or the company in any manner. But mainly what should be bothered is if there is a disproportionate right being given to any shareholder as compared to other shareholders. And I will give you a few examples. Many shareholders, I would say, in the case of United Sprit takeover by Diageo, in case of Cairn India, when it was taken by Sterlite, they say that as long as you own 1 share or 1% share or 2% share, thou shall be chairman, thou shall be managing director, thou shall be paid that much money. This is unfair. How can you take away the rights of 90% shareholder or 99% shareholder to give benefit to this thing? So any disproportionate right should be shunned by the shareholder, not only by the shareholder, by the regulators also, so that real democracy is there. It is like saying that people living in Parel should have 10 times more vote than people living in Nariman Point. No, that's not possible. So you have to have the equal right, and nobody should have disproportionate right in the company.
My question is, do I need to know who owns how much stake in a company?
I think it's one of the most important factors when you're investing. Who are your co-investors? Who owns how much? Has a lot of story to tell. First is getting the information, then interpreting, comprehending and taking decisions is the last step. So first, if you ask me how important is it to know who owns it, it's very, very important. Why is it very important? It is important because there will be institutions which can own it. There could be the promoter who owns a larger stake. It's always good to have companies in your portfolio as a retail investor where the promoter holdings are significantly larger, and maybe institutional holdings, and the price at which those average prices are also available in the public domain on what prices they've picked. It gives you a clear indication whether there is skin in the game from the promoter or not, whether he's reducing stake, increasing stake. This helps you take a very good investment decision. If you know, if you do some survey amongst listed stocks, it was quite an eye-opener. The companies with a larger promoter holding had better performances and had larger governance than the ones which had smaller stakes relative to the other ones. So I think it's very, very critical if you know who is your co-owner and co-investor. I think that's a good start point.
Sir, as a small shareholder, what are my rights regarding the pledging of shares by promoters, and how does it affect me?
As a small shareholder, you have right only on your shares to pledge or not to pledge. However, the promoters have their shares and they can pledge their shares. But it is very important for you to know whether the promoters have pledged their shares or not. Because, say for example, you have invested ₹1 lakh in a company, and I have invested 20 crore rupees in a company. So you will feel that, look, Mr. Gupta has invested 2,000 times more money than I have invested. So Mr. Gupta is there in that thing. But if I have borrowed by pledging my shares, entire money, and used it in some other business, so you are still exposed to the company for 1 lakh, whereas I have got out already. So that raises a very big issue which is debated everywhere else, but this debate has not started in India yet. The concept is empty voting. That although I have so many shares in the company, but I have pledged those shares to him, and he is not exercising right because the law does not allow the pledgee to exercise. So I am exercising the right without even having any financial exposure. So it is very important to know But here one has to be very cautious. Many a time the promoters pledge the shares for taking loan for the company itself. But many a times they pledge it for taking loan for private purpose. So and in India the distinction, it is not distinguished whether the pledge is for the personal purpose or for the same company. The day it is done, then you will be very informed whether the skin in the game is continuing in the company or not.
Is it really important for minority shareholders to be active or involved, especially in the appointment of directors and people who are going to be managing their business?
I think having a representative as a small shareholder is very critical, because you've been given a right to actually have one director. As long as you have 20,000 rupees and above invested, or the market price as of the closing on the record date is greater than 20,000, you have a right to actually choose a director collectively, right? So I think it's very important to have a representative, but I think you cannot have decisions individually done. So you have a representative who can protect your interest in the board, in the hem of affairs, and actually participating in the day-to-day activity. So it's very critical, and you should have your representative in there to take the decisions in your favor.
And that's really a wonderful note to actually wrap up this show on. I mean, the subject is so vast that it's very unfortunate that we have to club it in this time. But we do hope that both of you will indulge us at some point in the future, and we can take this forward. For now, thanks very much, Mr. Gupta, for joining in. Thanks very much, guys. I hope this has helped you in some manner, and that you will both be going out to exercise your shareholders' rights, as with all of our viewers. Feroze, you have to stay back. There's a little bit more left on this show, but we need to take a quick break. Before that, here's our weekly question. Have you ever attended or voted in the annual general meeting of a company whose shares you own? Write to us at money@network18online.com and stand a chance to be a part of one of our future episodes. We need to take a break, but still ahead is our viewer call-in segment, Can I Afford It? Stay tuned.